It's about people who say, I want to start, I want $100 a month, then I want $500 a month, then I want $1,000 a month, then I want 5,000, then I want 10,000, then I want 50,000. Like that's what I care about. I don't really look at charts anymore. All I'm looking at is how much is my income gone up.
Sitting to be back with Scott Welsh. We talked a few years back about his trading style. Now he completely changed his style, kind of moved something different. I think a lot better. Looking forward to hear the story about it and the kind of transition he made. So Scott, welcome back on the podcast. Good to have you here, of course. And yeah, looking forward to catch up.
Yeah, great catching up, and we talked a little bit offline to get started. So I think you know I think you know where the story's going. It's good to meet with you again. Yeah, the shorter version, and we can go as long or detailed as you want, and kind of like we were talking. I started in Forex in 2008. Found it. A friend of mine introduced me to it, and it was great. I thought, oh, it's new, unique, and it's different. Then 2009, I really got into it. Started trading. 2010, we had our first really big windfall. Made 50% in 3 months, and Forex is the best. And we're day trading, and it's just the best. And I built my first Forex robots, which robots weren't a thing in 2012, and that's what I started. Like nobody was built. Like I was a weird person, who we press buttons as traders. We don't make strategies. So started building those in 2013. I spent 2,500 hours on a robot and built it in 2013. In 2014, it made 100% in a calendar year, which was great. Actually made 100% in the middle of a live show I was at talking, and it made 100%. And just stayed in Forex all along, all the way up to all those years, trading most on and off, mostly on. 2020. Made some new strategies I was excited about. Entered the World Cup Forex trading contest. Finished second. It was like 74% win or whatever. Second place. I mean, things were great. And then really since 2020, everything started to turn. We got to discuss that, but we can get into that if you like.
Yeah, what was the turning point or the thing that made you want to get out of Forex, or that made you kind of less interested into it?
Well, again, all those highlights, I was super into it. There was nothing that was going to drag me away from trading Forex or whatever. So 2020, it was interesting about the contest was obviously it went well. I got up to a total 100% gain for the year. I was never going to catch a number one guy, but I kept going from fifth to third and got up to second. And it was mid-December in 2020, and I started losing right at the end of the year, because again, I had hit 105% or something like that, and it started falling down, and then mid-December I got in the 70%, and I was in second place, and I'm like, I'm shutting this down. That is the end of that. I'm gonna ride this and see if I finish second, and I did, but it started getting weird really then. That was a really just the last tail end of that whole year, and it had been fine really the whole year. But it's a trend following strategy. It traded just breakouts, and it traded a certain time of the day, the New York Open. If it went well, we made profits. And as trend following systems do, they lose sometimes. I mean, everybody knows that. It's part of the deal. But I didn't really love it the way it was losing because it was a quick reversal. It looked manipulated. I know it's not, but it felt manipulated because I'm in a trade and I'm up 100 pips, and now I just took a 100 pip loss. So that I started raising an eyebrow, but didn't stop anything. It kept trading. And then really in the last 18 months, 24 months, started watching my trades. And as I mentioned to you before we got on the air, I got stopped out on a 50 pip spread. It was a winning trade that was a 50 pip loss. And it was, and like I mentioned before, it wasn't news. It wasn't 5 p.m. New York, and it wasn't Sunday night. It was just in the middle of the day on a spike. And that, I mean, like, what is this spike doing? Like, is this where we're at right now? With my broker at that time was Oanda, and it just got very twitchy. And there were a couple that really soured me. The 50 pip loss, that was a winner. But then when I had a few more trades that were winners that got stopped out because of spread, not because of the trade itself. And I'm like, I don't know about this anymore. And as it turns out, as I've gone back and looked at it, there's a possibility it could have been my VPS, because I tried to put, as I skip ahead in the story, but I tried a VPS with something different with TradeStation, and this VPS operated funny too. So it's a combination of MT4, it's a combination of broker spreads, it's a combination of having to use a VPS because it's trading all night. It had to do with, I honestly got tired of waking up in the morning and having to deal with a trade because it traded all night. That was like, I didn't like that. I don't know why it started to get me like, oh, there's a referendum on whether I'm a good trader or a bad trader every time I woke up in the morning. Not every time, but so there's just a lot I started not loving, and finally just said, let's start investigating some other things. So it got rocky there, and real strange.
Interesting. Then you move into futures. Was that the thing you're now trading at this moment now, or did you have any other changes from there?
Yes and no. I started getting into futures. I've always loved futures. I feel like futures has been around, for decades. But going back to the pits, going back to even the 20s or whatever. I always loved futures. It's very above board. There aren't any crazy spreads. It's very responsive to automated strategies, which is what I've been doing since 2012. I just really liked it. I like day trading strategies. I like being done by noon or 1 o'clock p.m. You trade the open and that was it. You're out of that trade usually in a half hour, an hour. So I loved all of that, and that went very well. I just started with a basic opening gap type of thing, and then I started adding more strategies. Doubled my account just over a year, doing great. Added some more money, account kept going up, and I highly recommend futures. I still have a futures account. I still trade my wife's on futures, so futures still exists. I still study it all the time. But that actually, the drawdown that happened in July 2023 changed things and moved me into what I love most now.
Tell me more about the drawdowns, because it's a fact that if you're gonna trade full time, like you gotta make money from the market to live, it's hard to go through the drawdowns, especially when they're kind of lasting a long time. So was that a deciding factor for you to move into something different, or was that only part of it, or did you learn to deal with it over time? How did you deal with these drawdowns?
Yeah, 100%. Drawdown is part of it, right? And again, I'm a high performance tennis coach, as we may have talked about before. I still love coaching, and it's still very much a passion of mine. And dealing with all of that, right? I've studied the ability to lose and how to lose, all of that. I get it. And trading systems, they all lose. But I started thinking about, if you're going to retire, or if you're going to build an addition in our basement, let's say, or let's do some architect, if we're going to do something for real in our lives, how do we start that in a drawdown, right? Or, we just bought a new house, right? We never really had a big house. We wanted a big house. So we bought a nice house, and it's like, that comes with a big mortgage payment. Well, what do we do about a mortgage payment if you're in a drawdown? And we're not. We both have incomes, and so we weren't relying on trading per se. But what if we wanted to? Okay, well, our future system, the portfolio went into a drawdown July into about a 3-month drawdown. It just wasn't making new equity highs, and it was gradually grinding downward. And it's just hitting me. It's hitting me. It's like, this is part of the game. However, I don't want this game. I want money. I want money coming in all the time. Like, how can she retire? How can I retire? I mean, I love what I do. I don't really need to retire, but I want her to retire. How do we do that in a 3-month drawdown? And it's no different than the sequencing risk that people who retire and do the 4% rule, which is kind of ridiculous. But it just occurred to me that I can't really live my life and make plans if you're going to go into drawdowns, and trading loses, period. So that's why I thought, have I been thinking about this all wrong? Like, have I just been chasing the wrong thing since 2004 when I started to fall in love with trading? So that's when I made it. That sort of mindset is what made the big transition into where we're putting a lot of our money right now. It was the drawdown, yes.
All right, so tell me what you're into now, and what do you trade, and what's your trading style these days?
Well, what I'm wondering is, like I said, am I playing the wrong game? Is trading the wrong game? And things started echoing in my mind, like, for example, Warren Buffett's famous quote, and he says, "If you can't learn to make money when you sleep, you'll work forever. You work till you die." And it's like, okay, Warren. Warren says stuff, and I love Warren Buffett, but he's got hundreds of billions of dollars or whatever. So he's not really relatable. So I've kind of blown that off. But I got to the point I don't want to blow that off anymore. Like, I want money coming in when I sleep. I want money coming in all the time. I don't want to worry about these drawdowns or worry about, oh, I woke up today. I didn't make money when I slept. So how am I going to make money? So the answer, of course, has been around right in front of everyone's eyes, and that's dividends. You know, buy dividend stocks, buy the dividend aristocrats, buy the dividend kings, because here you go. You buy a stock and you hold it. You buy Johnson and Johnson and you hold it, and it pays a dividend. And if the good ones pay you more money, and that money's coming in every quarter, and it keeps getting bigger, and as soon as it gets big enough, it's always coming in, and you're set for life. That seemed like, that is exactly what I was looking for, except for the fact that dividend stocks are terrible, right? Because no one can do anything with Johnson and Johnson. Like, you and I can't do anything with Johnson and Johnson. If you bought, or the SPY, right? The SPY, if you bought and held it, would pay you like $100 a year, on a reasonable amount, like 10,000 or 12,000, $20,000. So dividends got the right idea for sure. It's just, it's just not enough money. So that's why we turned to trading, right? I mean, I knew about dividends a long time ago. I loved dividends a long time ago. I've read every good book out there about dividend investors, and I've spent hours studying dividends, and it's not enough. It's nothing that we can do today. So, not to belabor the suspense, but in the last year, it's become really popular, and it's these high yield dividend stocks, right? Which are not even stocks, they're ETFs. But high yield came on the scene. Really, the first was TSLY, Tesla, based on Tesla. And that was late 2023. That was really the first big name. And it's revolutionary because it was paying 50, 60, 70, 80% yield. And it's like, and just everyone just, looked down their nose at it like, this is absolutely ridiculous. It's another Wall Street trick. It's garbage. It's trash. And it just kind of did its own thing for a while. But all of a sudden, high yield has become everywhere, and more single stocks got offered, and now index yields, high income ETFs and high yields have come, and now they're everywhere. And I studied it, and I watched it, and I watched it, and I watched it, and I'm like, isn't this the answer? I mean, at least for what I'm looking for. If something's paying a 50% yield, I can work with that, right? You put $100,000 in, you're going to get paid $50,000 in a year, right? That's pretty good. Why doesn't everybody do this? And there are a lot of reasons why everybody doesn't do it. They're not very good reasons, but I just started getting more and more attracted. Like, well, let's see, if it's a 50% yield, again, just hypothetical, even though that's what these yields are. Well, the more shares I buy, the more money I make, period. There was a story I read in a YouTube video about a guy, he built himself up from scratch trading the SPY, and he just treated it like an ATM, and he just, every time it went down, he threw money at it. He just, money all the time. And it's great. His account grew, but he's not making income, right? And I thought, well, what if you did that exact same thing and it actually mattered, right? Every dollar you put in actually pays you back every single time. Differing amounts and all that, but it just kind of blew my mind. This is what I want for my money. There are no 3-month drawdowns, right? It's paying you money, and you can do it monthly, and now it's weekly, and the entire mindset change of you wake up and you go to your computer and money's coming in regardless. It's just blown me away.
How do you deal with the volatility? Because I'm guessing volatility on the high yield ETF would be super insane, or we will have like these big swings. How do you deal with that stuff?
And that's the thing too, right? Because it's an obvious question. You look at Tesla's chart. You look at the one of my favorites, CONY, which is Coinbase, which is super volatile, right? Look at the chart, and people are like, who might be raise an eyebrow, thinking you see that much yield. They think, oh, well, look at the chart. But looking at the chart is all wrong. That's the whole problem. And that is, A great example, and it's not mine, but you think of Ford or Tesla or any car company, they buy a factory. Okay. What's the point of that factory? To make cars. And why do they make cars? To make money. So when they're going to go build a factory, do they look at what's the cost of the building? I mean, they do, but do they look at, is the building going up or down in price? How much is this factory? What's this factory worth next month? Oh, the land values have gone down. We better sell this factory, even though it's only been operational for 30 days, right? It's ludicrous, right? You don't do that, right? If something is producing money, that's its only job. That's all it's got to do. So to answer your question directly, I don't care. I don't care what Coney does. I don't care what Tesla does. Because why should I care if I'm going to sell? Because we've all been trained, me included, when you look at the stock chart and it must go up. Your portfolio or your automated strategies, it must go up. If it doesn't go up, you lose. We're all trained for this, me included. But what if it didn't matter? What if the only thing I cared about is if it paid? Then I don't care what Coney does, and I don't care what Tesla does, and I don't care if it goes down, because if it goes down, I can buy more shares at a smaller price, at a cheaper price, and all of a sudden now I have more shares, which means more income. It's not for anyone who cares about a stock chart. It's not for anyone really that has a mindset of, well, I'm going to make this trade and I need it to go up. It's about people who say, I want $100 a month, then I want $500 a month, then I want $1,000 a month, then I want 5,000, then I want 10,000, then I want 50,000. Like that's what I care about. I don't really look at charts anymore. All I'm looking at is how much is my income gone up. I mean, my income's gone up like, I don't know, 7 or 8 straight months. Like I make more this month than I did last month, and next month I'll make more than I did last month. And that's all I look at. But again, totally different, and I get it.
Interesting perspective. How do you structure it though? Do you add over time to the ETF, or do you just like put in all your money at once, or how do you kind of set this up?
And what's fascinating is you get into this world of, the big money coming in, and there are so many different ways to do it, which is crazy. You don't have to go for the crazy ones like Coney or Tesla or NVDY or any of these. You don't have to do any of it because there's more of these products coming out. You can trade an index, and that stock chart might actually go up over time, right? So if you need the stock chart to go up, and you'll take a much smaller yield, so you're getting much less payments. However, your stock chart's going up, which means I mean it's comforting because you could sell it and not have a loss. I get that. But something like that, where we're talking about 20-25% yield, and the stock chart actually might go sideways or up, you could theoretically do it all. Like, okay, I've talked to gradually people are asking me what I'm doing, in my real life, not just on interviews, and I tell them. And they're like, immediately tell me more, right? Because everyone's interested in income. And their idea is, well, I'm going to put several thousands or tens of thousands of dollars in a simple one that trades an index, because it's not going to go to zero, and it's not going to go defunct. It's not going to be volatile, and it's going to pay me not 2.1% like Johnson & Johnson. It's going to pay me 20, 30, 35%. So in that case, you could just put it all in it. As far as if you wanted more and you want to build your income, you want to say 2 years from now, I want to be making $15,000 a month from my investments, then you're going to have to, I would say, divide it up. And so if you had $10,000, maybe pick 4, right? So you can get paid every week. So you choose one that pays on the first week of the month. You choose the next one that pays on the second week, third week. So every Friday you're getting paid, which is nice if you want to budget and pay bills. And then you'd put like 1 quarter in each. And then what do you do? Well, you could start with any amount of money, but then what do? You say, okay, well, money's coming in. I don't need it right now, so it's going immediately back in. I'm immediately reinvesting. If you do that, then guess what? You're guaranteed to make more money, almost certainly guaranteed to make money next month. So you could do it that way too. Some people say, every down day, I'm going to buy some more. You don't really need to. You're not buying it for the stock chart, but every down day, so they just go in and boop, 10 more shares. Boom, 10 more shares. You can do it that way. With Robinhood, which I thought Robinhood was just silly. I mean, it was for, gambling addicted, people back in the pandemic. Robinhood is the kiddie land. Robinhood is great. I have Schwab, but Robinhood is great. And you know what Robinhood has? You can buy every day. So you can set it up. I want to buy something like Coney. Buy me $10 every day, and just do it that way. And lo and behold, you wake up in several months and you're going to end up with more money than you had before. Lots more money, right? Again, will the stock chart go down? It might. Will your total return go down? No. But I mean, again, you gotta have a mindset and know what you're getting into, and you have to totally understand it.
I'm guessing the risk is if you have to sell the ETF one day because you want to get out of it, then you would maybe lose a chunk of your capital, right?
There you go. And there you go. And I think I've heard all the arguments against it, and I think that's the best one. Listen, for whatever reason, I got to sell this thing. I have to close my account. I'm moving overseas. Oh, well, I've been getting all the income from this, and now the stock chart has gone down. Your total return could be even or even positive. But look, I bought it at 100 or I bought it at 50 and now it's at 20, right? That's a real problem. The counter argument, though, to that is how much have you been paid? It's like, is your home paid off? So, for example, you buy something with 100% yield, which Coney many months has 100% yield. Okay. Stock chart goes down, so you may have to sell it. But can you hold that for a year? Because guess what? In a year, you got all your money back. Okay. So you're selling it. Maybe the stock chart did drop and you are selling at a loss, but it's already paid off, right? If you sell a house later that it's already been paid off, did we lose money? So yes, if you buy it and it goes down in 6 months and it hasn't paid itself off, yeah, that's a loss and that's a problem. But everything I've bought since day one, I'm never selling. I'm telling it to you and to your big audience or whatever. So I'm never selling, It's a stupid rhyme, but if it pays, it stays. I don't know who said that. I think I made it up, but I don't know. But if it pays me, it stays. So the answer to you, I'm never selling, so I don't care what the stock chart is. But yes, that's a very good example.
How are the fees in these ETF? Do you know they're pretty high or?
Oh, very high, extraordinarily high. There's all sorts of because if it's gonna pay you a lot of money, it's an option strategy. I mean, that's how they pay it. People say, oh, it's a dividend trap. And there are dividend traps, and watch out for those. But this is not that. There's no such thing as a dividend trap with high income ETFs that are based on options, right? It's just they're selling covered calls, basically. That's all they're doing. And they're doing it for you. And you have to pay them to do it. And I'm happy to pay because I know how to do covered calls. I'm very well versed in options, and I don't want to do it. I absolutely do not want to do it. Be happy to do it if I had to, but I don't want to do it. So yeah, it's like 0.9, what is the SPY? It's like 0.0 something of a percent. It's under a half of a percent, I think. It's nothing. Well, this is like 1%, some of these, right? So yeah, that's really high. So, right? That eats out of your profits. I don't care. I mean, you never see it. It comes out automatically. Yes, it's way more than an index fund, and I hear you. I hear everyone, but do not care. If I'm making 100% yield, I will pay them 1%. Yes, I will.
Is that a part of your portfolio? Is that your whole portfolio? Or how do you structure this?
I've got 3 right now, and I just keep literally every day. I'm putting more and more money in them because, there is that psychological benefit, right? We all like to see progress as humans, and as a high-performance teacher, progress is the real truth, your real key to happiness. So when you see more money coming in, guess what? It's exciting. So I'm pouring more and more money in, but I have 3 different accounts. On one account, I'm going to own every little thing I can find under the sun. I started with crazy little dividend stocks like Starbucks, whatever, that just pay pennies. But I have a small position. I'm keeping that. And I've built around that, a couple of those little dividends. I've added all of them. I've added Yield Max is those are with all the big payers. That's the famous broker. And so I've added all of them, Coney, Tesla, whatever. So I think I have 22 different ETFs in that, and that's a big one. I just keep adding to it. Right now I'm focusing on the highest yielding ones and then building it back down, but that's one. The other one, I started with just CONY. That was the first thing I did. I wanted to see if this is all too good to be true, whatever. And it wasn't too good to be true. Coney was at 100% yield when I bought it. And in 3 months, I had been paid 30%. Well, let's see, that's 10% a month. So it was working out. So right now, that one just had CONY and now I've added two others, MSTY, which is the king of them all right now. It's the hottest one, MS, because based on strategy, MSTR, and I added NVDY because it pays and it's NVIDIA. So that one's a little tiny one, and I just added in it. The third one, and it's the other super controversial topic about this particular style of investing or trading, is using margin. These things were made for margin. We were all told that margin is terrible, and it is. It was terrible in the 1920s when people were buying stocks on margin, and it caused a stock market crash and the Great Depression resultingly. And if you're trading regular stocks, margin is risky. It is. But if you're trading high income stocks, margin is, can I say it? It's not risky. I mean, am I allowed to even say that margin isn't? Because you buy stocks on margin and you buy a lot of them. So you're pretty heavily margined. And the worst case scenario in the world, you get a margin call, right? You know what that means? It means they want like $42. Well, guess what? Every Friday I get paid $250. I'm just making these numbers up, but they're pretty accurate. So there goes the margin call and it goes away. Bye-bye. So you can use margin with these because they constantly pay you. A margin call is just say, give us more money. Well, all of these give all the money. So you can go heavily into margin indefinitely. And if you ever wanted to pay it off, then just stop taking money out and they will just pay all the margin off. And now you own twice as much ETFs as you used to have, and life goes on. So the long answer is the third account, I'm margin like crazy. I'm going not all the way to the edge, but as close to the edge as I'm comfortable. So like 90% of what I could be using on margin. And that's just 6 stocks. That's just 6 simple ones with low margin maintenance requirements. So I get a lot of bang for the buck. And just, again, I just keep throwing money at them.
It sounds scary for sure, because you could be going far into margin and like be in trouble, I feel. But
it does feel that way. I'm not afraid of it, and definitely don't do it. And no one has to do it. But if you get a margin call, you just have to wait for the next dividend payment. I mean, it's literally it. And the worst case scenario is if you're on margin and you need to sell, you get a margin call and you're like, they said, the dividends aren't in yet, pay us now. You're selling a stock, a few shares of a stock. Again, it's tiny. It's going to be a tiny amount. A few shares of stocks that you didn't own anyway. So why, it's not going to cascade. A margin call with regular stocks can cascade because stock goes down, you sell, it goes down, you sell more, and it's a reverse snowball. But you're always getting paid. So the margin call goes away. It'll eventually just go away. Again, nobody has to do it. But I love it. It's wonderful. You get more bang for your buck and money's always coming in. But again, if you're a buyer and a seller, yeah, I wouldn't do it. Yeah, you got to be a holder with this type of thing. Again, this couldn't be more alien to all the things that I've thought and talked about over the past several years, but just obsessed with it.
But I guess a cool way to start would be to just kind of start to invest into it, start to buy a couple of these stocks like you mentioned, and just kind of look into it small. Like you don't have to go all in like you did, but just kind of begin small.
Start with $50, whatever. I mean, all of these are under $50. Buy one share and just watch it. When people ask me, that's exactly what I say. I say, I'm gonna be 6 figures and beyond in it probably. I'm escalating, 10,000 this month and 10,000 last month, and I keep putting more and more in. Start with $50, just watch it. Start with $75 and buy a couple, and just watch it and see what you think. It is liberating to know that money's always coming in. I mean, it's changed my life without a doubt, and I love trading since day one, since second one. But nothing has been as euphoric as this. To know that I'm moving forward with my life and my assets are always paying me. A wise billionaire once said, never buy anything that doesn't always pay you back. And I never got it, but I get it. I get why they say that. But you buy apartment buildings, you buy precious art, or you buy dividend stocks, or you buy high yield dividend stocks, and that stuff pays you back.
Anything else you want to mention? Anything else you've noticed after trading this new method, or is there anything else we recommend people to kind of look into, and where can they start?
Absolutely, I would go to the big names, which are the big four in this world, are TSLY. That's Tesla. Um, I don't love Tesla myself, but it's the original and it's been around forever, and that's the most data, right? I've always been a data guy, right? I have to have 20 years of data before I test or trade a trading strategy. Tesla is the long, and again, none of this has been out very long either, which is a really great reason to be scared. I get it. But TSLY is one. The second pillar is NVDY, NVIDIA, NVDY. And the third one is Coney, CONY. And then the fourth one is Misty, MSTY. All of those are under Yield Max. So look up Yield Max ETFs. They explain it all. They explain how they take their trades. They explain all the option trades they take. They explain all the yields. They give you a distribution schedule. It's a great resource on how to do it. But start with those four. There are people out there in internet land that have started with those four and have gone from $100 a month to 20,000 a month. It just go, and not in a long, because they haven't been around that long. All of these are 2024 and beyond. So, people have gone from zero to life-changing money in a hurry. Again, they're never selling. They're probably using margin, and they don't care about stock charts. But I would definitely check out Yield Max. Now, there are other calm ones, KURV, Curve. Those are the latest rage. They keep their stock charts pretty well. They're not quite as aggressive with their income, and they pay you less. So you can also look up KURV. Those funds are very, very popular, and they have I think 6 or 8. They just came out with some new ones. So that would be a way to dip your toe in, get paid. A lot of them will get paid weekly. And then one more to add, going back to Yield Max, YMAX, YMAX. That doesn't trade just one stock. That trades a whole basket of stocks, and they pay out weekly. So you could try that out. You could say, okay, I'm going to buy a couple shares of YMAX, YWM, or YMAX, and see what it feels like to get paid every week. I mean, it's pretty fun to get paid every week. So you could try that out.
I mean, people always ask how much money do you need to make good income with trading? And I guess if you're in Forex, you might need a couple $100,000 to do it, or at least a good $50,000. How do you see capital requirement for this kind of strategy?
None. I mean, whatever you want. Yeah. Again, you would trying to work backwards. Okay, $10,000 a month would be awesome, right? Let's say that would pay all our bills and then some. Okay, so it's $10,000 a month. All right. Well, if you have 100% yield, then you only need $100,000, right? Now, definitely don't recommend with these taking all the money out. You should let them grow enough where you're leaving some money in so that it can grow, right? I would definitely not. You could. So let's say you wanted $10,000 a month, or you wanted $100,000 a year. Well, then that would probably be $200,000 with 100% return, but you're not taking all of it out, right? And you can look at it that way. Or listen, I have a 20% yield. I'm more comfortable with that. It's an index. It's much more calm. Okay, then you back it out. Well, if I need 10,000 a month, then we'll probably get into, do the calculator, whatever, 300,000 for whatever that is, right? But it's real easy when you know the yield. It's real easy to back it out. With Forex and even with futures, for me, Forex is like, well, I'm averaging 30% or 40%, but I've had a 100% year, but I've also had a break-even year. Like, how much money do I need to retire? I mean, again, you said it. It's probably $200,000, $300,000, assuming it. But it was always in the air. Well, I don't want it in the air anymore, right? I want to know, this is my yield. This is what I can expect. It will fluctuate, but so yeah, the capital, depending on what you want. If you just wanted $1,000 a month, I mean, you could start with, if you wanted to try the aggressive one, you could start with 10 grand probably, and try to get, pay a couple bills with it. It'd be worth a try.
Where can people find you or connect with you if they want to learn more about this stuff? Or do you teach this, or what can they kind of connect with you?
Well, I've just started. It's such a switch. But yeah, they can always email me. It's my name with one T, so scottwelsh@gmail.com. I also have a website, brand new one coming up. It's scottwelshstrategies.com. And I have a dividend income program, and I'm just keeping it small. It's a once a month, actually more than that. It's just a program you pay for a year. And what I really wanted, though, is people to have access, right? I've been studying this like crazy ever since it came out, and there's a lot of questions, right? So I did offer that. It's not that much, but you get access to me, and you're like, I'm scared of this. What should I do about that? And I want to help people and email them and have the one-on-one thing. So that is something that they could buy. But yeah, if you just wanted to email me and ask me questions, I'll be happy to send you to the websites or whatever. But even if you still love trading and love pressing buttons or love trading robots, maybe it's something you could put on the side and say, hey, I want some income coming in, and start messing around with it. It's been so liberating for me. I definitely want to share.
Interesting. Thanks, Scott, for the advice here and to share this with the listeners. I appreciate your time, of course. And hopefully you can catch up soon and see more about what you're doing with these high yield ETF.